Okay, we are now recording, and just a disclaimer, we are recording this Zoom meeting for quality assurance and training purposes. So everyone be aware, I'll also put a note in the chat. Thank you.
Excellent, thank you, Steve. And again, welcome everybody to Real Estate Friday. We're super excited to have you. And today we have a guest speaker, and it's our in-house attorney and title company. We're gonna be having Marta Pozo going over the closing process. And again, for those of you that were with us this past Tuesday with Armando's training on the process of a transaction from A to Z and negotiating and going over our contract. Well, today, as a continuation of that, we want to put together and connect the dots, and we want to go over the whole closing process and the disclosures. So I want to introduce to you Marta Pozo from Nations Trust. She's our in-house legal, and she'll take it from here and she'll go over the entire process of closing. Marta, thank you so much for joining us today.
You guys, good afternoon and happy Friday to everybody. I hope everybody is staying safe and being safe during this time. Today, I was asked to put together a presentation with regards to the closing disclosure. And I get questions all the time about, you know, the closing disclosure, what do certain cost and what are certain sections of the closing disclosure. So that is why this presentation, I feel, is a good, it's a good start for the realtors to come become familiar with these documents. And these are documents that you're going to be explaining to your client. So it's important. And again, the more information you have, the better of a resource you are to your clients, and you're adding value to that relationship, which is something that I always talk about in these presentations. So I'd like to start with the format of this presentation is going to be is that Steve is going to be playing a video, and we're going to go through each of the 6 pages of a loan disclosure, and after each page, I'm going to open up the forum for questions and any comments that you may have. So if you'd like, Steve, let's start with the first part, and I've asked one of the attorneys from Old Republic to put this together. Okay, Steve, you can start.
Okay, thank you, Martha. Here we go. Are you seeing the right screen?
Yep.
Okay, hold on. Hold on, I'm just doing a couple settings here to optimize it.
I'm Mary Schuster, Chief Product Officer and EVP of Regulatory Affairs with RamQuest, here to talk to you today about the new closing disclosure form from the CFPB. In the past, federal law required 2 different disclosure forms to be provided to consumers at or shortly before their loan closing. The information on these forms, known as the final till and HUD-1, was overlapping and often inconsistent. Consumers often found the forms confusing. The Dodd-Frank Act directed the Consumer Financial Protection Bureau, the CFPB, to integrate these mortgage loan disclosures into a new single consolidated disclosure form. As a result, the closing disclosure form is a 5-page form that is due to the borrower for review 3 days prior to the closing or settlement in an escrow state. It is due to the seller not later than the day of closing or settlement. The lender or creditor is responsible for delivering the closing disclosure, or CD, to the borrower, also the consumer. But creditors may engage the services of a settlement agent to provide the CD so long as they comply with the provisions of the rule. The rule creating these new requirements is known as the Integrated Mortgage Disclosure Rule, or TRID, and it applies to most closed-ended mortgage transactions except home equity lines of credit, reverse mortgages, and true mobile home loans, when the dwelling is not attached to the land, or seller financing where the creditor makes 5 or fewer mortgages in a year. Let's take a look at the first page of the closing disclosure form to see what information is presented first to the borrower. Page 1 of the closing disclosure presents an overview of key loan information that the CFPB views most important for the borrower to understand. 3 important elements included on the first page include the interest rate, monthly payment amount, and the amount of cash needed for closing. The layout of information on page 1 matches almost identically the first page of information on the initial loan disclosure called the loan estimate. The borrower is to have received their loan estimate, or LE, within 3 business days after making their loan application. This continuity is intentional with the goal of bringing clarity to borrowers and highlighting the most important facets of their loan terms. In the top section, we see basic transaction information including closing date, property address and sale price, borrower and seller name and their address, and loan information. In the loan terms section is where the loan amount, interest rate, monthly principal and interest amount values appear. After each is a yes or no question of can this amount increase after closing. If yes, there will be more descriptive language. If no, there is no more language needed. Next, we see fields for does the amount have a prepayment penalty or balloon payment feature? Again, if yes, more descriptive language will be added. If no, the section is complete. For the projected payments table, this is the first of several areas of the form that we see will expand or contract based on the specifics of the loan being disclosed. If, for example, it is a 30-year fixed interest rate with no mortgage insurance, there would only be one projected payments column. It would show years 1 through 30 with a principal and interest amount fixed for that 30 years. If there was an impound account on the mortgage, that would be disclosed as well. In this example, we are looking at a 30-year fixed mortgage that does have mortgage insurance. We see 2 projected payments amount, years 1 through 7 with the MI included, and then years 8 through 30 with the MI discontinued. Your lender will calculate and advise as to the information that should be included here. You just need to be aware of which scenario your CD is reflecting. This section can expand to include up to 5 projected payment estimates. If there is an impound account for the escrows, the bottom section of the projected payments table will show how much is being deposited into each month and which payable expenses are included in the impound. In the closing costs section on page 1, closing costs is a total of closing costs less any lender credits. The breakdown is available on page 2 for more detail. Cash to close is a quick reference for the amount of the wire for the funds that the borrower needs to send in for their closing. The details of how that number was arrived at are available on page 3 of the CD. If this number is negative, this is the amount of cash back that the borrower will receive as a result of the closing. Now that we've had an overview of page 1, let's move on to page 2, where the details really start to emerge.
Steve, can you pause?
Okay.
Okay. Does anybody have any questions as to the information that is being presented on page 1? And you have the closing disclosure. If anybody does not have a closing disclosure in front of them, there's a link on the chat that you guys can click on to look at a closing disclosure of a file that closed yesterday in my office from the Doral Group.
I just dropped that again in the chat for those of you that joined late.
One of the important things that the speaker said was, who is responsible for issuing this closing disclosure? And I want everybody to understand that it's the lender's responsibility to issue the closing disclosure. And the closing disclosure is gonna be very close to that loan estimate that the buyer receives 3 days after they go to the mortgage or to the mortgage lender or to the bank. Does anybody have any questions with regards to page 1?
Guys, feel free to unmute yourself if you have any questions, or feel free to post it on the chat and we can go over it at the end if anything.
Okay, so if there's no questions with page 1, we can go to page 2 of the closing costs. And page 2 is a very important page. Steve, you can go ahead and start the next part.
Page 2 provides a breakdown of the closing cost details and lists the loan costs paid by the borrower, seller, and other parties. Sections A through D contain loan costs. Sections E through H contain other costs. Each line contains a description name for the fee. Moving across the page, there are 5 columns for fee amounts. They are borrower paid at or before closing, seller paid at or before closing, and paid by others. Moving from the top of the form down and looking down the page at each of the alphabetical sections, we see they are grouped as follows. Section A is for origination charges. Section B is for services required in conjunction with the loan, and the borrower either did not or was not allowed to shop for the service provider. Section C is for services required in conjunction with the loan, and the borrower did shop for the service provider. Section D is a sum of the totals in sections A through C. Section E is for recording fees and transfer taxes. Section F is for prepaid items. Section G is for initial amounts going in to set up the impounds or escrow account at the lender. Section H is for other charges pertaining to the transaction. Section I is a sum of the totals from sections E through H. Section J shows total closing costs less any lender credits. No 2 CDs will be the same, and no page 2s will be the same, so be sure to check and follow your lender's closing instructions carefully. You should also learn and follow the TRID rule carefully, especially as it pertains to the disclosure of all title and settlement-related fees. Here at Old Republic Title, we are here to help you with all of your TRID and closing disclosure form-related questions. Now let's look at what's covered on page 3 of the CD.
Okay, Steve, you can pause now. Perfect. So sometimes this page 2 is divided into 2 sections, but it'll be 2A and 2B, but all this information should be on your second page of the CD. Does anybody have any questions with regards to page 2? Also,
I do.
Oh, go ahead.
Hi, Martha. My question about, it says right here, the mortgage insurance premium. Okay.
Yeah.
So that mortgage insurance premium is always added to the loan, or that's optional?
That I believe that in conventional financing, and Armando may be a better resource for this, but if you have a conventional loan when you have 80% of loan value, there is no mortgage insurance. There's only mortgage insurance on certain loans that are made, and I believe those are your when you have a 3% down or a 5% down or anything less than 20% down. So that's when you have a that's when you have the mortgage insurance.
Okay.
Other than that, that's when you have that.
Okay,
I can
but
answer.
it's always added in the loan, or it's gonna be a closing cost from
No,
the buyer?
I can answer that. Conventional is private mortgage insurance. It's called PMI, and that's calculated based on the loan to value. So you got 100. If you got, like Martha was saying, if it's 80%, there's no mortgage insurance needed. Now, if it's 90%, there's a percentage that's added to the monthly payment on conventional loans. It's never added to the loan. Now, you can also pay on the certain amount that you can pay upfront and pay it off, but it's never recommended in a conventional. So if it's 95% loan to value, it has a certain percentage. It could be, 90% could be 0.005, 95%, 0.0078. So it's a monthly fee that's added to the payment. Now, on an FHA loan, instead of being called PMI, it's called MIP, Mortgage Insurance Premium. Mortgage insurance premium on all FHA loans, it doesn't matter what the loan to value is, you always have mortgage insurance. So let's say you were buying a property for $100,000 and you're giving $50,000 50% loan to value, and you had to go FHA because your credit was not satisfactory to go conventional, even though you're giving more than 80%, an FHA always has an MIP because it's a federally insured loan. So MIP, it's about almost as much as, I don't have the numbers. I've been out of the mortgage business for a few, probably about a year. But it used to be 3.5% on the down payment. And then on the MIP, for example, it will be, almost 3%. So by the time you add the MIP back to the down payment that you give, you end up actually financing, in some cases, almost the same amount. In other cases, even more. But then they added what's called an MIP monthly payment. So you have the one that you finance that you add to the mortgage, and then you have the monthly one that's 0.005. So you get hit twice. So an FHA loan is never attractive for a typical buyer that qualifies with money and great credit. An FHA loan is intended to buyers that don't have that that great credit or don't have the down payment. So it's a higher risk loan, but it's one of the most popular, if not the most popular loan there is right now for first time buyers, because it gets them in the house with very little down payment. So I don't know if I answered your question. Go ahead.
I have a question on that. Once you hit the 20% equity, you do have to refinance, right, to take those MI, or how do you,
PMI, yeah. So the PMI is for 80%. It has back in recently they've created a timeline in which the PMI will eventually go away. It won't last for the whole 30 years. But let's say you bought a house today and it's $300,000. And a year and a half from now, that market takes off and now the houses are $450,000 and your loan to value is less than 80%. You can call the bank and request that PMI gets taken away. And what they're going to tell you is they're going to send you a list of appraisers that you can use. You're going to go and get your property appraised. And if it's less than 80%, they by law have to take it away. You have to have it for a minimum of 1 year. That's on conventional loans. On FHA, it's for a lifetime. It doesn't matter. It will always be on an FHA loan. There's no way to take it off.
Both the upfront MI on FHA,
yes,
both the upfront MI and the MI, they're both forever?
Forever, yes. FHA, you can never take them away. That's just an insurance. It has nothing to do with loan to value. It has to do with the fact that you're paying for the insurance for the bank. In case that you ever default, the bank can just turn it over and FHA will pay them back. It's an insurance policy. It's not really based on loan to value.
Awesome, thank you.
Okay, are there any other questions on page 2? Page 2 is the bulk of this closing disclosure. This is where the majority of the costs are going to be. Does anybody have any questions about page 2? If not, we can move on to page 3, Steve.
I have a question.
Yes, Anmaris, how can I help you?
What type of fees can be negotiated besides the commission, of course? What type of negotiation can we do at this point? Like what type of fees can we negotiate with the closing?
Understood. So that is that like my colleague said on the video, each closing disclosure is going to be different. Each there are certain fees that sometimes they're going to be more, sometimes they're going to be less. Sometimes the survey fee may be a standard of $395. If you're looking at the CD that's in the chat, that CD was $450. That CD was more money because it was a bigger size property. So depending on the transaction there, some fees are going to be different and some are not. We at Nations Trust Title are here to help you close your transaction. So if you're today I'm dealing with a transaction where we're preparing a CD and it's for closing on Monday. The buyer is very tight on their cash to close. They only have a certain amount of money on the bank. So now we're working with the buyer to give them a little bit of credit. We don't do it all the time, but we understand that we're not here for just one deal. We're here to continue doing deals in the future. So we will work with you on your transaction. The title insurance is not negotiable. Those are promulgated rates by the state of Florida. So that's a fee that's not going to be, you can't, there's no room for that fee to be negotiated. Recording fees are not negotiable. Those are fees that are also promulgated by the county and by the state. The homeowner's insurance, your buyer can, your buyer can shop around the homeowner's insurance and see which one gives them the best rate. Property taxes are whatever is of record with the county. So that's pretty much it.
Really, you can't really, I mean, by this time, when you're getting to the CD, you get into the closing, that means that the bank was already giving a good faith estimate to the buyer. Typically, once those fees are given, they cannot raise those amounts. So they've already signed off on those expenses. And the stuff that Martha's talking about is stuff that's standard. I mean, those are doc stamps, title insurance. So typically, I mean, negotiating at that point is probably, if let's say they would have charged, the lender would have charged an origination or a discount point or something like that, it should have been disclosed and agreed by the buyer. Of course, if there's, short cash to close, there's stuff that can be revised. But if it's revised, then they have to redraw new docs. Is that correct, Martha? So it has to.
Yeah, that is correct.
Yeah. So once you're ready with the CD, that means you're ready to close. If they don't have, then they will have to schedule a new closing date and create a new CD with different expenses if it's going to be less.
I just have an issue with one of my clients because he's trying to go from FHA to conventional, but I have a higher, obviously, closing costs through the FHA loan rather than the conventional. So that's why my question came up, because I don't know what kind of route should I take on this.
Is that already approved by the lender, or you're trying to structure the loan? Are you there?
Yes.
Okay. Is that already it's something that's already been approved by the lender and you're ready to close, or is something that you're now restructuring the file to try to get him to go FHA?
It was already approved, but at the very last minute, the bank didn't go ahead and give him the loan because of the situation that is going on, that everybody's putting the accounts under deferment. But the guy started paying his stuff. It's not like the credit went down or anything like that. The account was on deferment for 3 months, and a month ago they started paying again. And just because of that, they stopped the process. But it was the day before the closing day.
Okay, but you can't just switch from a conventional to an FHA. You need a new appraisal to be done FHA. So is that already been done?
It was FHA and he wants to go conventional now.
Okay, so, well, you need to do a conventional appraisal.
Okay, so it's different, okay.
So what I would do, if he's a little short, then I would try to see if we can raise the price a little bit, get a conventional appraisal, and then get the seller to contribute in closing costs, and then that brings down his cash to close. But I mean, if you want, you can call me after. We can talk about that particular file, or I can refer you to Ralph, which is a guy that we use, does very well. But that's just a matter of the loan officer trying to use whatever's available as far as cash to close, and restructure the whole transaction. Okay. But that's really, you can't really negotiate fees that are standard fees. I mean, you can only negotiate stuff that is being overcharged by a lender, like a discount point or additional high underwriting fees or something like that.
Okay, thank you.
Okay.
Okay, if there are not any more questions on page 2, let's go to page 3 of the CD. Steve?
Page 3 of the CD displays a calculating cash to close table at the top. This is similar to an estimated cash to close table the borrower first saw soon after loan application on their loan estimate form. The cash to close table on the CD provides a comparison to the estimated numbers provided on the LE for an at-a-glance comparison for the borrower. If there was a change to the amount between the LE and the CD, additional language is required on the CD to guide the borrower back to the section of the form that shows the greater detail. The bottom 2/3 of the page 3 contains the summaries of the transaction for both buyer and seller. This area is formatted with section K as debits from the buyer and section M as credits to the seller. Section L contains credits to the buyer and section N shows seller debits. Some lines in these sections are designated for specific items. For example, line N4 is for the payoff of a seller's first mortgage. Earnest money on deposit would be shown on line L1. The buyer's new loan proceeds should appear on L2. There are additional specific lines designated depending on the scenario. So as always, check the TRID rule and your lender's instructions carefully. Next, we'll review page 4 of the CD.
Okay, Steve. So page 3 is what your HUD-1 page 1 looks like when you use a HUD-1, the bottom part of it. So that'll show the payoff of the first mortgage. It'll also show your tax prorations, your deposit, and your loan amount. Does anybody have any questions as to page 3 of this closing disclosure? Okay, if there are no questions, Steve, can we go to page 4?
Page 4 of the CD covers loan-centric disclosure information, including whether the loan may be assumable, whether the loan has a demand feature, whether the loan has a late payment fee, and if so, when that would be imposed, or how the amount of the fee will be calculated, whether the loan has a negative amortization feature, whether the lender will accept partial payments. It reminds the borrower that the lender will have a security interest in the real property until the loan is paid off. If there is an escrow account on the loan, page 4 also shows which items are included in the impound account and the amount to be collected each month for the item. Finally, if the loan has an adjustable payment or interest rate, one or both of the adjustable tables will be included in the bottom of page 4. If the loan does not have those features, those tables are not required to appear. Next, we will look at the last page of the CD, page 5.
Thank you, Steve. Anybody have any questions with regards to this? It's pretty self-explanatory, and it's just going to depend on the features on your loan. And questions? If there's no, sorry. Andrea,
did they fix the problem? Or?
Yep, they did.
Andrea, do you have a question? Okay, Steve, I think you can proceed.
The fifth and final page of the CD contains several types of information. In the top left section is a set of loan information titled Loan Calculations. For the borrower, this information includes total of payments, finance charge, amount financed, APR, total interest percentage. On the right-hand side of page 5, under Other Disclosures, the borrower will find information including information about their right to a copy of the appraisal, prompts or reminders about understanding repayment requirements and consequences, a brief statement about the potential for liability after foreclosure, and a note about refinancing as well as tax deductions. In the middle of page 5 is contact information for the CFPB, including a link to the Complaint Center. However, the primary intention of the contact information grid is to give consumers a thorough, current, and centralized Rolodex of the professional stakeholders so that when questions or needs arise, we can be accessible and accountable to our customers' needs. That's why contact information and licensure numbers are included in this section. Finally, you'll want to pay close attention to the signature block on this form and the language that accompanies it. Be aware that it is up to the lender whether or not this signature block appears at all, as it does on this example, or whether disclosure language similar to it appears on the other disclosure section on page 5 in the upper right-hand section. This is another of many areas where you'll want to be TRID smart, TRID aware, and reach out for help when help is needed.
Okay, Steve. Well, you guys, there you go. That's the closing disclosure. If anybody has any questions, general questions about this document, I'm happy to answer them now. And if you have any questions that come up in the future, you guys are welcome. I'll put my information in the group chat and you're welcome to reach out to me. Always work better by email. As that way I can respond to everyone. Also, before I conclude, I would like for Steve, if possible, could you put up that article that I sent you just earlier today? I just want to bring to everybody's attention, I know that we speak about wire fraud and you probably are sick of hearing about wire fraud, but you know, just yesterday, published in the newspaper was about a law firm who sent, I believe it was $3 million. Yep, they sent $3 million to a fraudulent account in Hong Kong. Everybody needs to continue to be very vigilant now in this time of COVID, even more so when it comes to dealing with wire transfers. I advise all of you that are involved in sales transactions to not get involved in sending out wiring instructions, putting anything on your phone that says wire, because there are people that are hacking into phones and they are sending emails with wiring instructions that look very similar to the ones we would send out. My wiring instructions have not changed in the last 3 years. Nations Trust Title wiring instructions have not changed. They're the same wiring instructions. Have the client call directly to our office to verify. It's on our wiring instructions that they need to call us to verify. We will not send out a wire. Sometimes it's, you know, we won't send a wire until we speak to someone and verify that wire. But we won't do it because of this issue with wire fraud that goes on a daily basis. Millions and millions of dollars are lost because of wire fraud. Anybody have any questions as to this? Then if there are no questions, I want to thank you guys for listening and for your time.
Martha, one last question. Hello?
Yes, I'm here.
Yes, Martha, okay. Right now I'm experiencing like one deal that I added the transaction fee for my transaction fee, okay? The reason for the title, this is a builder. The reason for the title of the builder says that they could not add the transaction fee. I have to ask the lender. So I spoke with the lender to add the transaction fee. The lender says, no problem, Michelle, I could add that one, but it should be the title. I'm confused now. Which one do I have to ask in order to add the transaction fee? Because the lender says, Michelle, I don't have any problem, I could add the transaction fee. But title says I have to ask the lender. What would I do now in this kind of transaction?
my advice to you is always to document. Can you put it on the contract?
In the contract, because this is a builder, they're always asking me like a letter, almost in the closing date, that says buyer agrees to pay the transaction fee to the office, and buyer sign. And
Maybe I'm going to give Dylan the floor because I think that he may have experience with this, but my suggestion.
understand why they cannot add it.
My suggestion to you is that the moment that you sign the contract, the moment where the buyer is, signing the contract and he is all gung-ho with this negotiation, that you give him a document, whether it's a separate document with your fee on it, and make sure that document is signed and verified. And then when they ask you for at the time of closing, then you present that document. And you can even present it as part of the contract. Dailan, I'll let you add because I'm sure you have something to add.
Thank you, Marta. Michelle, who's the developer?
Yes, they are Horton, Dylan, and that's I have the closing today, and this is what's going on.
Dear Horn, all the transactions are done with them. You have to let them know from the beginning to add it to the contract. If you don't, they won't add it automatically. They won't add the transaction fee to the contract. Now, the only way to get the transaction fee in the closing is you do need to have a letter signed by the buyer saying that they agree to pay the transaction fee, because it wasn't in the contract. And once you get the letter signed, then you submit it to the title, and title will add it to the closing the statement. That's the only way that you can do right now.
Yes, I understand. I have closed 4 transactions with them, and there's no problem within the 4 transaction. The same thing I've done right now. And this is the transaction that they're pushing each other. And I cannot understand, because the past 4 transaction is very easy. They receive my document with a letter that you have mentioned, that the buyer signed and I signed, that they want to pay the transaction fee. And right now this says, Michelle, we cannot add it. You have to ask the lender. And when I spoke with the lender said, no worry, Michelle, just ask the title to add it in the alta.
Did you send them the letter?
I sent them the letter. And before Roxana, it says, Michelle received, no worries, settled. Right now, they don't want it.
Okay, then what I would do is, and if you want, copy me in that email and send the same letter, send it again, and to the title company, whoever is handling that closing, and also send it to the lender at the same time, and just let everybody know, hey, here's the letter sent by the buyer to please add the transaction fee to the closing. Copy me in that email, and I'll take it from there if they have any issues with that. But
okay, so I'm gonna send it right now.
And it's signed by the buyer. As long as it's disclosed to the buyer, it's all good.
Yes, it's already disclosed with the buyer. Buyer signed it, and I have it. So I'll send it to you and forward the trend of emails.
Yeah. Send them an email again, both of them, the lender and the title, and letting them know to please add the transaction fee to the closing, and attach the letter.
Alrighty, thank you.
You got it. Does anybody else have any questions with the closing disclosure and what Marta covered in her training? If you don't have any questions now, I'm pretty sure you're gonna have questions coming up. So Marta was kind to put her information in the chat. It's Nations Trust and Title Company. Feel free to reach out to her. Email is the best way to communicate. As you know, we're in a high-paced business, so sometimes getting a hold of the phone is difficult, but she's really good at getting back to you. So please send her an email with any questions you have, or feel free to reach out to Armando or myself in regards to any situation that you might be having with a particular transaction. Monica, talk to me.
I'm sorry, Dylan. I do have a question for you, Marta, and that was on page 1. And it always confuses me. I always figure it out, but then I get confused in the next closing. Uh, on the first page, when it says principal on interest, and then it says mortgage insurance, and then it says estimated escrow, and there is a total monthly payment. But right below that, it says estimated taxes, insurance, and assessments. The escrow does not include the estimated escrow is taxes and insurance. So I never understand why it says later it says, oh, again, like taxes, insurance, and assessment. Is that because it includes the HOA, or I don't know if I'm explaining myself on my question.
That's exactly what it is. What happens is that can you hear me? Yes. Right?
Yes.
Okay, yes, that's exactly what it is. Sometimes they will add the homeowners association in the other part, and that's gonna be different than, right now, the one that we put in the chat is, the one that we put in the chat, there is no homeowners insurance, but a homeowners association. If there were a homeowners association, that amount would be listed in the others. And that would be different than the estimated escrows on top. The estimated escrows relate to the loan, the amount of the mortgage payment, and the estimated taxes, insurance, and assessments is different. They're trying to come up with a monthly amount of what this property is going to cost.
I'm sorry, I'm not seeing the one that you guys put on the chat. I don't know why I'm not being able to download it. So I have one that I. Okay.
What does it say? Yeah. What?
For example, on mine it says principal on interest. It says $996.73.
Okay.
Mortgage insurance, it says $99.28. Then estimated escrow, it says $457.11. That is a total of $1,553.12.
So that's gonna be your estimated total monthly payment.
Okay. And then on the estimated taxes, insurance, and assessments,
yes,
it says $590.11. So that $590.11 is taxes, insurance, and HOA?
Yes, that's what it should be.
Okay, so basically the $457.11 is included in those $590.11.
Correct. Correct. That's just duplicative information. So the payment is on top. That estimated total monthly payment is going to be for the lender, for the lender. That's going to be your monthly payment. However, the estimated taxes, insurance, and assessment is more like the carrying cost, including the homeowners association. So that $400 amount is included in the $590 amount.
Oh, okay. That's what always confuses me, because I'm like, why is double in here? Okay, thank you.
Okay, you're welcome.
Excellent. Again, if you guys go to the chat, you can see, I think Steve just put it again, if you can open the closing disclosure sample so we can all be on the same page.
Elan, let me make a couple of recommendations, something that I've seen coming up in the last 30 days that have been going on. When I know that everybody wants to close their transaction, I appreciate that, but everybody is signing a contract on June 1st and they're putting a closing date of July 31st. In today's atmosphere, in today's world, 30 days, unless your client is an all cash transaction, or if your client has a direct line to the lender, 30 days is not going to happen. So what I find myself, it is just one extension after another, trying to meet these unrealistic deadlines. So I would ask everyone who's putting contracts now to give yourself realistic deadlines. I know that you want to make it attractive to the seller. I know you want to close this transaction as soon as possible, but work with realistic deadlines, because you're going to be, you're going to have a disappointed buyer on your hands. You're going to have people that are angry with you because you can't close a transaction because your lender isn't going to be able to do it with the amount of loans that are out there. So please give yourself enough time, give title enough time. You know, if your lender approval is not till August 15th and your closing is August 20th, our office cannot do title unless we make everybody run, you know, in 5 days. So give us enough time between your loan commitment, loan approval, loan commitment date, and closing. Give us 15 days adequately to be able to order everything. You know, the surveyor is working under extreme circumstances. The lender's working under extreme circumstances. Everybody's working in a different world today than we were, you know, 5 months ago. So I ask you guys to be cognizant of that. Don't put your closing dates on the end of the month. Don't put it on the first day of the month. You know, set yourself up for success. Don't set yourself up for failure. You know, this, you know, it's great to be able to do a lot of closings, but try to again, set everybody up for a happy ending instead of stress. And on the lender side, on the broker side, you know, set yourself up with good timelines, contract timelines, so that you can be successful and have a happy client.
Yep, very good advice. Martha, there's another question in the chat. It says, lender's title policy is different from owner's title insurance? You're muted.
That's correct. I want everybody to think about title insurance. It's different than your homeowner's insurance. Homeowner's insurance protects you for events in the future. A hurricane comes, you know, and knocks down a tree next week. That's what your homeowner's insurance will protect you from. However, title insurance protects you for events in the past. So the title insurance comes of two types. You can have an owner's title policy and a lender's title policy. The owner's title policy protects the owner. The lender's title policy protects the lender. Very important thing. A lot of people are doing quitclaim deeds left and right. Oh, prepare a quitclaim deed here, prepare a quitclaim deed there. Two things that you need to understand. Once you prepare a quitclaim deed, that title insurance is no longer protecting those owners of those owners. The person who receives a quitclaim deed will not have the protection that the owners had. And also, when you ask me to do a quitclaim deed, make sure that you talk to an accountant to find out what the ramifications are of that quitclaim deed. Very important. I'm not an accountant. I don't give tax advice. Whatever deeds you're doing, everybody has their ramifications to all those quitclaim deeds. So make sure, you know, there's homestead ramifications. There's property appraiser. What's going to be the basis of that quitclaim deed if we transfer the property to the uncle? Now you're going to have a new base on that quitclaim deed. So that's something else. That's for another day. But please be aware that, you know, that all these quitclaim deeds have ramifications.
Absolutely. And just to add to that, especially if the property owner or the one getting the property is a foreign national, there's more taxes involved in there. So you have to be very, very careful as you advise somebody on that, preferably a tax attorney or a CPA, correct?
Correct. That's what I would advise.
Very good. There's another question here. It says, Marta, as far as the real estate closing date, does it matter of conventional or FHA? Does one need more time versus the other?
That would be a question for someone who's in the mortgage business right now. I can't tell you that. It depends on the lender. It depends on the lender. That's what it depends on. It depends on the lender and how backed up they are.
Absolutely. I would say on that, it's not so much, I wouldn't focus so much on what type of loan is it, but like Marta said, how backed up they might be. For example, I have a lender, they're really good, but the fact is that they're overwhelmed with work. They have so much work right now that if I were to say even 30 days or 45 days, I have to check with them because they might be running tight and we might have to ask for an extension. So always good to check with the lender that you're using to make sure that what will be a best time frame for them to work effectively on the file. All right, anybody else with a question? Let's see, no, nothing else in the chat. Okay, perfect. All right, Marta, thank you so much. Anything else you want to add?
Yeah, just make sure, I know that there's some questions on the chat that came into me privately. Please take down my email address, send me an email, and I'll be happy to answer that email. Other than that, thank you guys for your time. I hope that you guys took some value from this. I hope it helped.
It definitely did. And I really learned a ton, and I took a lot of information, and I wrote down a lot of notes on that. So thank you so much, Marta, for taking the time and joining us today on this and putting a lot of light on the closing disclosure. I hope you guys understood. I hope you guys took a lot of note as well. And again, if you have any questions, please feel free to reach out to Marta, and she put her information in the chat, or feel free to reach out to any of us, to Armando or myself, and we'll be more than happy to walk you through it or give you Marta's information in case you have any question or specific issue with a file. So with that said, I hope everybody have a great day. Thank you so much for joining us today. Have an amazing weekend. Please stay safe. We do have a tropical storm coming up, or storm period. I don't know what's going to happen, but please stay safe. Make sure you do have all the essentials with you. And you know, if there's anything you need, feel free to reach out to us. We're here to help you. Okay, guys?
And Daylon, I just wanted to make a plug for the Relevant Agent 2020. I dropped the Facebook link in the chat. So before we go, if you would all please click on that link in the chat, and that'll bring up the Facebook event. You can share that directly on Facebook with all of your colleagues and peers. And for you Broker Nation agents, don't forget about the competition that we have, okay? The 5K competition. So make sure you invite, share, and tag all the other real estate agents in your database. Thank you.
Excellent. If you need a recording of this training today, feel free to reach out to Steve. He'll be more than happy to send you a link so you can have access to the recording. Okay, guys? Again, take the time to see the information. We do have trainings coming up. So you can go to www.brokernation.events, and you can register for the upcoming trainings that we have available.
Dylan,
Hey.
a question for you. Remember you said yesterday that they did extend already the eviction protection thing. Do you know to when? When is the next extension?
Well, I'm waiting to get the, Marta, have you heard anything on that? I mean, I heard it yesterday that it was getting extended again until September 7, if I'm not mistaken.
I'm sorry, I missed the question. Is this regarding evictions? Is that what we're talking about in foreclosures? I believe that it was extended until September. Yes. I don't know the exact date, but I believe it was September. And that goes for mortgage foreclosures and for evictions.
Correct. And on I gave you guys information on attorneys that are working on eviction cases. Feel free to reach out to them as to procedures, what's allowed to do now, what's not allowed. Not doing anything is the worst you can do. So make sure you do reach out the right people, and you asking, you get the information needed to be able to proceed and advise your clients as well. If you look at the chat, Steve just posted what to share for next week. So we're having the relevant agent 2020. The link is there for the training. Feel free to register and share with other agents as well. Very good training. So make sure you make the time, put it in your calendars, and I hope to see you there. All right, guys. So anything else? Very good. Excellent. All right, so happy Friday, everybody. Enjoy your weekend. Thank you so much for joining us today, and please stay safe. Bye, everybody.
Thanks for joining, everyone.
Bye, everyone. Thank you.
Marta, thank you again for your time. Appreciate it.
You're welcome. Thank you, guys. Have a nice day.
Thank you. You too.